beautiful Selfish Babe. It is your girl, Anike OC here, bringing you another Selfish Babe Selfish Talk podcast. And I would love to introduce you guys to Lay, who is the CEO of Good Credit America. Say hello.
Hi, guys. How are you?
And remember, if you are listening to the podcast, subscribe. And if you're watching on YouTube, make sure to subscribe to the YouTube channel as well at Olenike OC. Now, Lay, how would you introduce yourself?
Well, I would like to introduce myself. First, I would like to thank you for having me on this podcast. I really appreciate it. My name is Kalea Cross. I go by K Cross the Boss on Instagram. I'm the CEO of my dad's company, Good Credit America. And, I started working with credit very early in my childhood. My parents talked about it a lot. My mom, my dad has been building people's credit for a really long time. So it's something that we talked about, in our household, because they don't really teach you that in school. You don't go to school to learn, about credit and about financial freedom and about finance. I did major in finance when I went to college, but they don't really touch on, credit. So I think my first experience with credit is very similar to a lot of people. Their first experience is probably something bad, right? Where they got someone called them because they missed a payment. And I think my experience was very similar,
Before you get in, I want to say something to Selfish Babes. So for the Selfish Babe listening, I have met Lay at a retreat that I had met through India.
Right.
And it was a retreat about real estate and financial wellness and building that so much more so in that kind of arena. And so I remember Lay and her dad had presented on credit. And I was like, oh, wow, this is really good information. And so I know Lay has helped me with like some business credit for Selfish Babe and Goddess Detox, as well as setting up, the LLC and, the paperwork that sometimes we don't want to do. And so usually when I bring a Selfish Babe on, I like to ask them, what specific experience or obstacle or traumatic experience that they have been through. And so I was like, oh, we're talking about credit. Like, let me ask about a financial traumatic experience or a financial obstacle. And so I know she was going to go into it just talking about bad credit. And the reason I really wanted to have this podcast is just because a Selfish Babe had DM'd me on Instagram, and she had asked if I could do a podcast on credit or like financials. And so I'm like, oh, who do I know? And I remembered Lay, and I was like, I want to bring her on a podcast because as a Selfish Babe, when it comes to us selfishly and authentically loving ourselves, there's so many aspects to that. And I think one of those aspects is building wealth and making sure and taking care of our financials as well. And here in the States and everywhere really in the world, credit matters. And back in the day when I was younger, I didn't really understand why credit mattered. Even honestly, about a year and a half ago, I still heard about it, but it wasn't something that I felt that I needed too much. And so when I had went to that retreat and Lay and her dad had presented, they kind of broke down the importance of credit and building wealth. And I'm like, wow, like when she had mentioned that we really don't, get taught this information in school is very, very true. And so I'm just so glad that you're on the podcast to be able to kind of break it down for the Selfish Babes, as well as help any Selfish Babes that do want to get their credit in check. Because I know there is something out there. It's no shame, right? It's called being accountable. And so, taking accountability of our finances. And so now I do want to ask you, Lay, I know you're going to get into it, but tell me about, a financial traumatic experience for you.
So I would say I was in college, right? And, when you go to college, you think you're responsible. You open up your checking account. You pretty much get your first checking account in college. I know we do as, so you pretty much get your first checking account. You get your savings account, right? And when you go to open up these accounts, it's usually someone on campus that comes to the school. I know for me, I went to Temple University, so that was PNC Bank. And once you open up those accounts, the clerk says to you, do you want to also open up a checking account, right? And when you go to college, you think that you're responsible. You think you know everything. So, of course, yes, I would like to open up that credit card, right? I don't know a whole lot about it. I wasn't taught, a lot about it. The only thing that I was really taught was most people, you need to have good credit. So when they ask you if you want to get a credit card, you think that you know everything. So you're like, yes, I would like to get my first credit card. So that was me. I had got my first credit card. I knew about credit because my dad had been telling me. So I got my first credit card. And then a couple months later, I got a call from a representative from the bank, and I'm pretty sure everyone has experienced that. You get the call, hello, this is Sally calling from a recorded line, and your heart drops because you're like, who is this calling me on a recorded line? And back then, creditors could say anything that they want to you. There were no rules and regulations on, how they spoke with you. So, I'm on the phone, and she's telling me you need to pay this before you get that credit. And I'm just like, oh my God, I've always had good credit. This is my first credit card. My parents taught me to be responsible. I'm in college. I'm a finance major. I understand credit. And I hung up the phone and I immediately called my dad, crying, oh my God, I'm going to have that credit, because I knew about it, but I didn't know so much about it, right? I didn't know that if you missed one payment, your account goes 5 days past due, and it doesn't report to the credit bureau, but it's also considered late, and you may get a late fee, but you're still okay, right? So I'm thinking my credit is going to be ruined. I'm not going to be able to get a job, and it's the end of the world for me. So that was pretty much my first experience. My dad, he calms me down and he explains to me the different stages of your accounts going past due. And then, my journey on learning about credit and being more responsible pretty much started through the lessons like that. So lessons that my dad was teaching me about credit. I paid it and it was fine. And then I learned that, your account goes 5 payments past due and you're fine. You actually have 31 days before your account actually goes and reports late to the credit bureau, right? So that was a traumatizing experience for me, getting called by a collection agency, not a collection agency, but, by a creditor. I've never had that experience before. And I'm pretty sure so many people have went down that road, so pretty traumatizing for me.
You said that you was afraid you wasn't going to get a job. Now, how did you relate credit to getting a job?
Well, because credit, oh my God, it impacts so many different parts of our lives. And one of them is getting a job, because getting a job is so competitive, right? Pulling your credit report has now become a factor when it's time for you to compete against someone else with getting a job, right? So I actually know someone who she got the promotion, right? She celebrated and everything. And then her job checked her credit, and she had been working for the same company for years, right? And her job checked her credit, and then, she had bad credit, so she wasn't able to get her promotion. So today, in this world, if you have bad credit, it can prevent you from getting a promotion or getting the job that you wanted.
Stupid, though, because I feel like, hey, if I'm going to get this promotion, I'm going to get more money. And would that not benefit my credit if I am paying my bills on time? Or if I have extra money to pay bills or extra money to pay off my credit card, wouldn't the promotion help me get better credit? You know what I'm trying to say?
It does, but in the eyes of lenders, you look irresponsible. And how can you be responsible in your work setting if you're not responsible with paying your own bills on time?
Wow, that's crazy. I had no idea. Okay. Now I want to know, so why is good credit even important? Because I know that there's some selfish babes listening that could be that know about it, right? The different age range that know that good credit is important. But then there's also some selfish babes like me when I was probably, like I said, a year and a half ago, I really didn't understand the impact it had for me or the impact that it could have for me or what the point was, how could I even benefit it? So first I want to ask you, why do we need good credit?
So good credit is important because it creates opportunity, right? So everything that we do in everyday life, credit affects it, right? So we already went over jobs, right? It also affects our lifestyles, right? It affects where we can live, right? It affects what kind of car we can buy, right? So having good credit, it creates opportunities, right? So let's say, for instance, I had an 800 credit score, right? But I didn't have any cash, right? So if I had an 800 credit score and I didn't have any cash, I could go to Navy Federal Credit Union, USSA Bank, I could go to Bank of America, I could go to Chase, I could go to all of these different banks, right? I can get $10,000, right, from 10 different banks, right? And now I have $100,000 worth of credit, right? So let's say, for instance, I sold an investment, right here in Atlanta. You can probably get a nice investment property for $50,000. You may have to put $25,000 in it, but you can still do it. So with my 800 credit score, I go out, right? And I get 10 credit cards, each with $10,000 on it. And now I have $10,000 worth of credit, right? I'm going to take that $10,000 worth of credit, buy me an investment property for $50,000. Let's say it costs $25,000 to renovate the property. I'm going to take that $25,000, put it into the investment property. So now I've spent $75,000 from other people's money, right?
Yeah.
So let's say, for instance, the after repair value of that house is $150,000.
And what's after repair value? Because I know we be babies.
So the after repair value is exactly what it says. After the repairs, this is how much the house is valued at. So I bought it at 50. I put 25 in it. So now I'm at 75. And after all of that, it's worth $150,000. And there could be a number of different factors where it is, right? What type of things that I put in, like, did I put hardwood floors? Does it have a fireplace and so forth, right? Because all of those different fixtures and characteristics of the house brings up the value. Yeah. So now the house is worth $150,000, right? So, what do you, and I'll just ask you, what do you think the return is on that particular house? If I was to sell it at $150,000, how much money would I make? I would make,
girl, don't ask me these questions.
I would make $75,000. I would make
good.
But if I decided to keep the house, right, I could refinance it, meaning I can take the cash out of the house, right? Mm-hmm. And I could get a loan instead of my credit cards. I could get a loan, pay those credit cards off with a loan, and keep with that whatever additional cash I earned. I can keep that cash and do whatever I want with it. So if I spent 75, right, and I went and got a loan for 150, I can take this 75,000 and do whatever I want with it, right? So if I put 75,000 cash of my own money into this house, I would have had 100% return on my investment. But because I used someone else's money, right? I went to 10 different banks and got $10,000. Because I used someone else's money, my return is unlimited, right? Because I use none of my money, right? Mm-hmm. I have no risk, no skin in the game. The only thing that I have is my 800 credit score. So credit provides opportunity. It gives people leverage. It gives people opportunity, right? If you have credit and you own a business, you can lend, right? You can get credit from yourself. I mean, you can use yourself, right, to get credit for your business, and you can use that credit to grow your business.
Yeah.
So,
something, because, initially when I'm hearing take out 10 different credit cards for $10,000, I think fear. Or back in the day, I used to think fear, dang, why do I have these credit cards? Can I even pay this back? But I think apart from opportunity that it creates, I think there's also a bigger picture, which is the plan after. Because for me, if I just took out these credit cards, and of course I'm using other people's money, but then I always think about, well, how am I paying this back? But for you, you talked about a plan. You talked about having an investment property. You talked about taking out this loan, eventually, fixing it up, then selling the house, and then making a profit. And so now you're able to pay off those cards, right? And so for me, I hear plan, not just take out these credit cards and no plan, because for me, then I'll be like, oh, that's why? That's fearful. I'm not going to mess with credit. Like, I'm not going to owe people money. Like, I don't want to do that. You know, and I don't even like owing people money. I like to make sure shit's paid. And so do you think having a plan, if you're going to do something like that, having a plan is important?
Yes, I think having a plan is very important, right? In anything that you do, you want to make sure that when you are, investing in any type of investment, that you have a strategy to get out, right? You have a strategy to figure out, what your return is going to be, right? You don't want to go into any investment not knowing what your exit strategy is. So having a plan is very important, but then also our mindsets, right, is, important as well, because we've always been raised, right, to pay off all your bills, right? Credit is bad because our parents always had a bad experience when it came to credit. But we have to ask ourselves, why did they have that bad experience? And the reason is because they were uneducated. They didn't know, they didn't understand. But if they had the understanding, then they would not have had bad experience, and then they would not have passed that down to us.
Yeah.
Right? So a lot of it has to do with our mindset.
Yeah, I agree with that, because even when you and your dad was like teaching just about credit and wealth, it just brought so much a greater perspective for me, because like I said before, I was very fearful about credit, of like having multiple credit cards, and just my thing is owing people money, not paying bills on time, because I do agree. I know that growing up, I've seen that in my household, right? I've seen that. And so then it's just like, I don't want that to happen to me. I'm not going to have creditors and people calling up my phone asking me for money and I don't have anything to pay them with. And so I do agree, having the education is very important, and also taking away the fear. I think once we have a better understanding of it and understanding why we're using it, and then having the plan in place, then it's like we can create those better experiences. And I definitely agree with you when you're talking about the mindset. I think it's just so important, especially for selfish babes, because I think a lot of times we could stay so boxed in what we think is like these savings and pinching pennies, and that's gonna like help to bring us wealth. And it can for maybe some people, but sometimes that's not the case. And so, for example, let's say if I am going to start a business, right? And I'm like, I know I can fucking sell these bags. I know I can sell these bags. I just need $1,000 to freaking buy these bags at wholesale. What'd you say?
Exactly. I just need $1,000. I know I can do it.
Yeah, I just need $1,000 to buy these bags on wholesale. And then I'm going to sell them for $75 a piece. And then but it's like, well, how am I going to get this $1,000? Well, I could save my money from my job, right? Yeah, you can do that. And it may take a long time. But if you have good credit, what you can do is buy the bags now. You wouldn't have to wait. You can buy the bags now. You have a plan in place, right? You're already working on your marketing. Let's get that together. So you buy the bags. What do you say?
People are ready to order from you, right?
Exactly. So you buy the bags, you put them on your website, you start marketing. Boom, people are buying. Boom, you're making profit. Oh, before you know it, you sold 10 bags and you made $1,000, but you still got 300 bags to go. That means you have more potential to make more money, but now it's like, now you're profiting. Now you don't have to wait. And I think that's what I want to like stress to the selfish babe listening is like, I think when you're talking about opportunity, that's it. When it comes to credit, because usually what it's like, no, we have to sit, we have to wait, we have to pinch our pennies, we have to save our money, and then we can possibly go on to new opportunities. But if you had good credit and you are able to buy those bags right now, that creates an opportunity for more money. Not necessarily, dang, I'm gonna have to owe these people. No, it's like, I'm gonna make this good ass profit, I'm gonna pay them back, and then I'm gonna be able to buy a bigger bulk next time because I made so much money. Yep. That's the way it is. And so I really like that you touched on that. But now I just really want to kind of make sure the selfish babe listening understands, like, you can do different things with your money, things that are going to make you more money. And that's what she means when she's talking about opportunity, is like, how can you create more money for yourself without having to wait for something long term? Because if I was being real, and I don't know the type of jobs people have right now, but if I was being real, you may have to wait a while. Right. Saving, putting away, spending on bills, what more can you do? And it's like a lot of people, they stay, I think, in like a bucket of like scrambling all the time, because it's like, dang, if only they had more money to work on their plan. But again, having a plan is important. Like I said, you just don't want more money just to have more money to do nothing with it. What is the plan? Right. And so I know that there are some selfish babe listeners that want to know, well, okay, girl, well, I don't got an 800 credit score. My credit score is maybe in a 400, maybe in a 500, maybe in the 300. Like, can you break down a little bit of like lower credit scores, higher credit scores, and then we can go into how do I get a better credit score?
Okay. My computer is on 6%.
All right, so tell me about the lower credit scores to the higher credit scores, and how do we get good credit?
Okay, so the lowest credit score that you can get is a 300 credit score.
Okay.
The highest credit score you can get is an 850, right? So if you take 850 and subtract it by 300, there are a total of 550 points that you can manipulate in order to impact your credit score, right? So I'll say that again. So the lowest credit score you can get is a 300. The highest credit score you can get is an 850. So between a 300 and an 850 credit score, there are 550 points that you can manipulate in order to get good credit, right? So depending on what your score is will determine what different interest rates that you would get approved for when it comes to a house, right? When it comes to credit cards, when it comes to car loans. So that directly impacts what your what you can get approved for. So I'm sorry, my father just came in here and kind of like made me. Yes, so based on what you can get approved for, right? So depending on what your score is, you'll be able to get a certain house or a certain car or a certain type of credit card, right? So there are 5 factors that impact your credit score. So the number 1 factor is going to be payment history, right? The number 2 factor is going to be utilization. The number 3 factor is going to be credit length. 4 is credit mix, and 5 is going to be new credit. So your credit score, right, the 550 points from having bad credit to having good credit, there are 5 things that are impacting that score. And if you can understand those 5 factors, then you'll always have good credit.
And what were they again? You gotta repeat those. I know I was straight want to know what they was again. I gotta rewind. What was it again?
So if you Google what makes up your credit score, what's gonna come up is a pie, right? Or if you have any credit monitoring service like my Credit Karma or Smart Credit or My FICO, they'll show you a pie, and of the pie it'll be different pieces, and the pie is going to be broken up into 5 pieces. So the number 1 factor is payment history, and the reason why it's the number 1 factor is because it makes up 35% of your credit score. The number 2 factor is utilization, and that one makes up 30% of your credit score. And then credit length makes up 15%. Credit mix makes up 10%. And then new credit is the other 10%. So as long as you can understand what those 5 factors are, then you will always have good credit. So if payment history, right, is 35% of your credit, then you know that I need to make my payments on time because it impacts 35% of my credit score. So in the event that I make a late payment, if you have good credit, it literally impacts your score tremendously. I know for me, I had got a credit card, right, with Saks, right? I had an 890 credit score at the time. And
890?
Yes.
890?
I mean, sorry, 790. My apologies.
I'm like, what? I thought we would come on to 850. So 790.
790. I apologize, guys. So I had a 790, right? I've always wanted a Neiman Marcus credit card, so I wanted to get some shoes. You know, I love my shoes. So I went to Neiman Marcus, got me a credit card, bought a pair of shoes. They were having a sale, and I forgot about it, right? Because I run my different multiple businesses. We're entrepreneurs. We get busy. And Neiman Marcus called me up. So this is the second time that I had someone call me up about my credit card. So Neiman Marcus called me up, and they were like, they were very, very pleasant. And they told me, like, you missed this credit you missed your payment, right? So they said that you missed your payment. So, I was hysterical. I was like, that's impossible. It's no way. Like, this is years later, I'm not a child anymore. I understand credit. I teach people how to build their credit. I talk about it all the time. I had that credit and fixed my own. So I'm like, that's impossible, whatever. So, it was like $230. So what I told her was, I will pay it off right now. Like, actually, I hung up with her. I called my dad and I told him, I was like, look, I missed the payment. I got, my credit score went down 40 points. One payment, 40 points.
Boy, damn.
So I called him up and I was like, oh my God, what do I do?
Yeah.
I've been teaching people, telling people that they need to have good credit. I've been telling people what to do. And here I am in this situation and I don't know what to do. So I called him and he was like, well, you call them back and tell them that it was a mistake and ask them to update your credit report. And I was just like, okay. So I called them back and I said, I always pay my bills on time. I've never, ever been late ever in my life. I've been late before, but I've never been late. I've been very responsible with my credit. I can pay it right now. It was an oversight. Can you please update my credit report? And they said, no problem. I made my payment and they updated the credit report and I got some of my points back. I didn't get all 40 back, but I did get 30. So
when you told them to update your credit report, that was like, you told them, I'm going to make the payment now. After the payment's made updated, what did they say to the credit report? Oh, like, what did they put?
They put that it was an error on their part.
Ah, wow. See, those are tricks that I know the selfish babes don't know.
That's the power of understanding credit, right? Because had I not known that, right, I would have took a 40-point hit, and then I would have had to come back from that, and it's hard to come back from 40 points, right? Because it's just hard, it's not easy. It's not easy to come back from 40 points. So knowledge is power, right? It's cliche, we say it all the time, but it's true, right? Because I knew that, I was able to call them and get a portion of my 40 points back.
Yeah, I like that. So I have a question about, I don't know if it's called credit to debt ratio. It's something.
Yes.
What is that called?
That's the second part that makes up your credit score. It's called utilization. And basically it's how much of your debt you're using, right? So if I have 10 credit cards and the total of my credit is 100,000 and I'm using 10% of that, then I'm only using 10% of my credit, of all of my credit, right? So where you want to be at 10%, right? You want to only use 10% of your credit. If you want to maintain an excellent credit score, you only want to use 10%. 30% is okay, but 10% is better. So in the eyes of a creditor, they want to know that you need them, but you don't need them, right? It's a catch-22. You need them, but you don't need them, right? Because they want you to borrow so that they can make money off of you, because they're in the business of loaning credit. So they want to collect the interest, right, off of the credit that you're using. But the lower your utilization is, the higher your credit score is. The less you borrow, the higher your score is. So for instance, you can have a 750 credit score and you can be maxed out on your credit cards. Your credit score might go down a little bit, right? So let's say you had a 700 credit score and you start using your cards a lot. Your credit score will go down. And then once you pay them off, your utilization will go down, and then your credit score will go up, because the utilization is 30% of your credit score. So if you're using a lot of your credit, that's affecting 30% of it. You see what I'm saying? So it's really math when you all think of it, right? Your 750 credit score is made up of 5 different parts, right? We went over payment history. That's why payment history has such a huge impact, because it's 35% of your credit score.
Yeah.
30% of your credit score. So it has a huge impact. Once you start using a lot of it, your credit score goes down, right? And then the next one is length.
Hey, before we go back, I'm still a little confused. So you're saying, okay, so let's say that we did have let's say that we had $10,000 in credit, right?
Right.
Percent would be $1,000, correct?
Right.
So then let's say you were like, okay, so I should only utilize 10%. 30 is okay, but only do 10% because you don't want them to feel like you need it, for example, right? But what if I do start, let's say if I use $7,000 of my credit card from 10,000, my credit score is going to go down, correct?
Your credit score is going to go down. So the more of your credit, the more you use, the less likely your credit score goes down. So the more you use, your credit score goes down, right? Because your utilization is based off of how much you use. So if you use 70% of your credit score of your credit card, your credit score is going to go down. If your credit is mixed up of just one credit card, then your score is definitely going to reflect that. But if you had 10,000 credit cards, right, and you use 7,000 on one card, the whole is looked at as opposed to just one credit card.
Okay, so now let's say that I had just one card or, $10,000 worth of credit. I use 7,000, which is 70%, and my credit score goes down. How do I make it go back up?
Pay it.
So I just pay it. Will it take time?
2 ways.
Okay.
You can increase your credit limit, right? Because if you increase your credit limit, right, your utilization is going to go down, right? And that means your credit score is going to go up.
Okay. And that means I have a higher amount of credit. So instead of 10,000, maybe it's 15,000.
Exactly.
Okay.
Or you can pay it. And when you pay it, your score will go up.
I like that. All right, continue.
So that's 2 factors, right? So now we're at 65%. So I just told you that your credit score was made up of 5 factors, and I just gave you 2. And I told you if you paid on time, you would always have good credit. And I told you if you kept your utilization down to 10%, you'll always have good credit. So already 65% of your credit score has been manipulated. So you have control of your credit score, right? But you didn't know it because you didn't understand what it took in order to have good credit. But now that you understand that 65% of your credit score is made up of payment history and utilization, you can now take control of 65% of your credit score, which is major, right? You can pay your bills on time, right? As long as you're in the position to do so. You can keep your utilization down as long as you're in the position to do so. So now we're going to go to credit length. So credit length is 15% of your credit score, right? And you can't determine when you started your credit, right? I started my credit, I would say probably when I was 18. So some people may have started their credit when they were 30, right? So if you started your credit at 30, and you're now 31, you basically don't have any credit, right? You're trying to build your credit, right? So you can't really impact, when you start your credit. You either started it at 30 or you started at 18, and that's 15% of your credit score. But what you can do is, and this is something that a lot of people don't talk about, you can become an authorized user on someone else's credit card.
Okay.
Now, an authorized user is someone who has the authority to use your credit card, but they're not responsible to pay it. So, for instance, if I was a mom, right, and I had a child who was about 13 years old, and my child went away to camp or whatever, and I wanted to make sure that child had money at all times, I would get a credit card for my child, and she would have her own credit card, right? She could use it while she was away at camp. The moment I put her on that credit card, her credit is activated. Now her credit history starts at the age of 13. So by the time she's 18 or by the time she's 30, she's already in a position to have an 800 credit score, because in order for you to have perfect credit, in order for you to get to that 850, you need to have excellent payment history for 6 years. Yeah. Now she's only 13, so by the time she's 19, she could have an 800, 850 credit score. Yeah. So it makes up 15% of your credit score, And as an adult, you either started it early or you didn't. But if someone adds you as an authorized user, you can benefit from the longevity of that card. So, Olenike, if I decided that I wanted to add you to my credit card and I've had it for 20 years, now it looks like when you pull your credit report, it will look like you've had that credit card for 20 years.
I like that, which is a benefit to me.
Which is a benefit to you.
I was going to say something. So, the idea of the mom opening up the credit card, I think for any parents out there, I definitely think that the parents should have a talk with the child. Not a talk as you're asking permission, but a talk of, hey, my love, this is what I'm going to do, and this is why it benefits you in the long run. Because I think having that talk creates a sense of trust, understanding that, yes, I have this credit card, understanding that mail may come under my name with the credit card, and that I'm doing what's best for you. And the reason I'm saying this is because, as a child gets older and if they see mail coming in their name with a credit card, they have no idea that this is happening, it could feel like mistrust and distrust. And it's sad to say, but some parents can take advantage of that and ruin their child's credit. You know what I'm trying to say? So I'm just saying for the parents that are going to utilize that, as teach them young, teach them the purpose of it. I think, yes, going out and doing it is wonderful, but let them have the knowledge too. Why are you doing it? How is it going to benefit me? Oh, wow. Thank you so much, mom or dad or aunt or whomever for doing this for me. But have that discussion, because sometimes I think parents do stuff, but they don't say anything. And then sometimes over time, depending on how old they are, it can create some mistrust. So I'm just saying, if you are a selfish babe who has kids that's going to do that for their children, make sure that you're paying that bill on time. Don't ruin their credit. Don't ruin their credit, okay?
Well, the thing is, if they don't pay on time, they're going to ruin their own credit.
Got it. I got it.
Because they're still responsible for the debt. The parent is responsible for the debt. The child just has the authorization to use it, but they're not responsible for paying it.
Okay, so it's not getting a credit card for the child and just using their name and social security with no connection to you. They're the authorized user under your card.
Exactly. So they're the authorized user on your card, yes.
Got it. Okay, I was a little confused.
Okay, sorry.
No problem. All right, continue.
Okay, so I just went over, so that was three factors. The next factor is credit mix. So credit mix there's actually two different parts of credit mix, right? So one is installment credit and the other one is revolving credit. So installment credit is your student loans, your mortgage, those types of credit, right? And then revolving credit is going to be your credit cards and your charge cards, sorry.
Yeah.
Revolving credit means that you can use it and use it again, pay it and use it again, pay it and use it again. For instance, a credit card, right? When you pay your credit card, right, at the end of the month and you use all of it, if you pay it, you can use it again, right? But with a loan, when you get a mortgage for your house, after 30 years, you don't get another mortgage, right? After you get a car auto loan, you pay it off, and then that's the end. It's the end of the term. If you get a personal loan, the same thing, that's the end. So that is what we call installment. And then credit cards is what we call revolving. So there's two different types, of credit mix. It's installment and it's also revolving. So having both of those is 10%, that makes up 10% of your credit score. So you can also impact that as well. So if you only have revolving debt, revolving cards, if you got a loan, that would help increase your credit score because now you have more.
You know you can pay.
Huh?
I said a loan that you know you can pay.
As long as you know you can pay.
Yes.
And then the last factor, which also makes up 10%, is called new credit. So new credit is basically breathing new life into your credit report, right? So if you do have bad credit and you are, trying to restore your credit, then one thing that you want to do is you want to breathe new life into your credit, into your credit. So basically that means open up new accounts, because new accounts is 10% of your credit mix. So once you add new accounts into your credit report, now you are in a position to impact 35% of your credit score because you're going to be making those payments on time. So if you get 5 new credit cards, right? Let's say you have a 300 credit score and you get 5 new credit cards and you pay all 5 of them on time for 6 months, that means you have 15 on time for 3 months. You have 15 on time payments, right? So if you have 5 cards and you pay them all on time for 3 months, that means you've made 15 on time payments. And because of your credit score, the payment is made is 35% of it. Now you can use those 15 on time payments to influence your credit score, and you can increase it. So 2 things is happening, right? You're breathing new accounts into your credit score, which is 10%, which makes up 10% of your credit score. And then also you're making those payments on time. So you're manipulating 35% of your credit score. So by breathing new life into your credit, by opening up new accounts and paying them on time, you're manipulating 45% of your credit score.
Nice. I like that. So now.
No, go ahead.
No, what were you going to say?
Oh, I was going to say, so, if you can understand the 5 factors that go into your credit score, you can have good credit.
I like that.
And you don't need to be a genius to figure that out.
I like that. I like that you broke down those 5 factors and gave us some more information. So now let's say that if I was a selfish babe that had a 300, a 400, a 500, a 600 credit score, and I really want to raise my credit because I see the opportunity it can create, how can Good Credit America help me do that? Because sometimes, I can do all that on my own, right? But maybe I want to get a little help, and maybe it's going to help it go faster. So how can Good Credit America help me, move up my credit score?
So Good Credit America has been around for years, right? And although I went through the 5 factors that impact your credit score, when you do have a score like a 300 or 400, it takes a lot of work to get up to an 800 or a 850, right? It takes work. It takes time. A lot of people don't have the time because realistically, you can, build your own credit, right? I basically gave you the formula, right? So you can build your own credit, but it takes a lot of work, right? It takes a lot of time, right? You got to know, who to send your information to, right? Because there are a lot of factors that go into building your credit. You have to pull your credit report, right? You have to pull the right report, because if you get your score from Credit Karma uses a different system to rate your credit score. So they use something called Vantage, right? And Vantage is just a certain algorithm that determines what your credit score will be. But lenders use a different, they use the MyFICO factor in order to determine your credit score. So you need to know, where you're pulling your score from, right? You also need to be able to analyze your report, right? So you need to know what language to use when you're disputing the things that's on your credit, right? You need to know, what to dispute, how to dispute it, when it comes back verified, what to do in that case, right? Because a lot of times people will try to rebuild their own credit, and they get stuck. They get to the point where their reports are being verified. The information that they're trying to delete off of their credit report is being verified, right? But what they don't know is that there are certain laws and regulations that are in place to make sure that the credit bureaus are being fair and make sure that the credit bureaus are verifying that information, right? So when they come back verified, you can still go to them and say, who verified it, right? What was the person? What conversation did they have? What was their name? What time? Who was it? Because what's happening is credit bureaus are private companies, right? And they're in the business of they're in the business of collecting information, right? So all they're doing is collecting data, right? And if you have a bad credit score, then you are more more profitable for them, right? Because they can sell your information at a higher point. Because if your credit score is low, that means you lack, education, and you can easily be fooled into paying off a collection item when you're not responsible for paying that debt when it goes to a collection agency. Because what happens is the company writes it off as a bad debt, and they actually get a tax break on it. So technically, it's illegal for a collection agency to collect on that bad debt, right? So a lot of people don't know, a lot of the information and a lot of the steps that goes into, building your credit. But if you were to do the research, you can do it. You can do it on your own, but it's not easy. It does take a lot of factors, and it's not, a lot of people think that you can build your credit in a month, 2 months, 3 months, but it takes a year. It takes time, it takes information, and it takes different strategies in order to build your credit. So our company has been around for a very long time. My dad has been teaching about credit for years and years and years and years. And our company has looked over 8,000 credit scores, credit reports. And one thing that we have noticed is that every credit report is rebuildable, right? No matter how low your credit score is, you can rebuild it, because anything that has been put on your credit report, it can be taken off, no matter what it is.
Okay, so if we wanted to reach out to you and work with you in rebuilding my credit, how would I contact you all?
So my company is goodcreditamerica.com, and that's goodcreditamerica.com. I can be reached at 470-231-8908.
Say again?
And 470-231-8908. Okay. And my email is Kalia, Kalia, at businesscreditfinancing.info.
And I'm going to make sure, Selfish Babes, that her information is below in the description as well. And they can follow you on Instagram. And what was your Instagram?
Yes. So my Instagram is KCrossTheBoss. That's KCROSSTHEBOSS.
I love that.
Thank you
for teaching the Selfish Babes about credit, why we need it, how to get good credit, how you can help us get good credit, and how we can take this credit and really flip it and make some profit, whether you're going to be investing, whether you're going to do it in your business and selling a product. I'm going to tell y'all, Selfish Babes, one of the good things about creating wealth is solving people's problem and selling them something. Okay, solving people's problem and selling them something. So you want to get on something to sell people, or do the investment thing in terms of home buying, like Kalia has mentioned earlier. But you want to get your credit right first.
Yes, you definitely do. Bad credit ain't cute.
Well, thank you so much, love. Bye.
Thank you for having me.